Good morning, everybody. Thank you for joining us for our weekly podcast. I'm Jennifer Phillips-Rousseau. I'm the Viticulture Extension Specialist with the Lake Erie Regional Grape Program. And I'm here with Kevin Martin, who is our Business Management Specialist. And we're here to talk a little bit about commodity pricing. But before we get to that, I just want to remind everybody that next week is our 2020 Winters Grower Conference at SUNY Fredonia on Thursday, March 19th. I know a lot of you come just so that you could learn about the research that's going out there and also get your recertification credits. I just want to remind everybody that please be sure to bring your pesticide applicator license card with you. We cannot administer credits without that card. So I just wanted to make sure that you have it all set and ready with your stuff before coming to the conference that day, next Thursday, March 19th.
The issue that is in front of us basically comes back to the coronavirus issues affecting the economy. If you've been paying attention to the news at all, that's a very serious issue, and it has spilled over into equity markets, and that's sort of been all over the news. So we wanted to really just take a moment and talk about how that might affect the vineyard operation business going forward. We've seen some pretty dramatic things in the last week on the equity side. A 20% drop in the past few days, certainly over the last month, and we're hovering at what we would call a bear market in terms of that drop. This has been the longest bull market on record, and we kind of got there, and it depends on how you define it, but it looks like we're going to get there. But to put that in context, about 40% of bear markets don't actually result in a recession. So that kind of thing, if it doesn't result in a recession, as far as equities are concerned, it doesn't really affect your livelihood at all. If there is a recession, that can affect grape pricing indirectly, particularly in what I would call, or what we call, demand-side recessions, which is what a typical recession is. Now, because this is being driven by a virus, if the fear actually is of a supply-side recession. So it's not that we have a bunch of consumers that are scared about their jobs and their financial livelihood. It's that we have factories and industries that can't produce the goods that these people want to buy anyway. So that's what a supply-side recession is, and the effects of it and how industry needs to react is very different.
May I ask a question?
Sure.
So we're talking about this because of the potential of certain commodity plants maybe not going to work because of the coronavirus. That's why we're having this conversation.
Right.
Okay.
Yes. And we have not seen, the biggest thing we've seen so far that will directly affect the vineyard business is the price of oil. So we talked about some of the supply side issues. There are some demand issues with oil because the producers use oil, not the consumers. So the demand for oil was expected to go down a little bit. We saw the price scale back for a number of reasons, but also related to the virus, from about $66 a barrel, a high last year, down to mid-40s, mid-50s, hovering in that range. And then this week it kind of fell apart because the Russians and the OPECs couldn't agree to constraining supply. So they're going to flood the market with oil. They're going to produce an extra 3.5 million barrels a day and see who blinks first in terms of how low prices can go and what they're willing to sell it for. And everybody so far is committed to just outproducing one another and pushing those prices down. So we're down to like $33 a barrel, which will mean cheap fuel and cheaper fertilizer. None of that has really hit the market yet, but there should be some opportunities on that cost side for grape growers in the short term. I think in the long term, it's probably a bad thing for most of us, for the vineyard operations, because of the impacts it could have on other commodity prices. But in the meantime, enjoy at least the potentially low cost of fertilizer and fuel.
Well, that's fantastic.
Yeah, so we've talked about this a lot. These commodities are not significant in terms of our overall budget. We're worried about labor, we're worried about pesticide costs, but we do use, we use NP and K. Those prices have not come down the same way oil has. They're not publicly traded in the same way. So we do expect those retail prices to fall in the future. But they have come down a lot in modest terms since their highs over the last couple of years. So they're already fairly low, kind of following the same trend oil has. Potash is down to 370, urea is down to 366, and phosphorus, at least for MAP, is down 435. But if you're pricing other forms of phosphorus, they're basically all down about 20% over the last year.
So just asking a question, and sorry if I'm putting you on the spot right now. Things are, from listening to you, things are looking good for us this season.
Yeah, I mean, I think there's a lot of uncertainty in the general marketplace. I think the biggest fear might be logistical issues around the distribution of products like grape juice. So I wouldn't say that things are necessarily looking good. I think if this does result in a speedy, if a speedy solution presents itself, or if it doesn't affect the distribution of goods, it will probably be relatively good news for vineyard operations.
Right.
How it affects, obviously, personal finances, it could be a very different story and is dependent from grower to grower. But in terms of how it affects vineyard businesses, it doesn't look like it's necessarily a bad thing yet.
Okay.
The flight to, so what happens is when people are afraid, they run away from scary things and run towards safe things,
Right.
which means we're going to see a strengthening U.S. dollar for the most part. We've seen that for the most part so far against a basket of other currencies. So that's good if you're going to buy a grape harvester. It's good if you're going to import anything, buy anything. It's bad if you're going to sell anything abroad. So it's not necessarily good news if you're exporting grape juice. So I think in general, it's complicated. The other thing I would note is other publicly traded commodities that you would think would react negatively because of these concerns and sort of the negative part of it that we're describing would be like the price of corn. And that has come down in price, but it really hasn't been anything dramatic. It's been bouncing around between $4 and $3.75 a bushel for the last 18 months, and it's on the lower end of that, and it seems to be at least relatively stable compared to these other commodities. And that would be, I think, the best indicator you have going forward of what grape pricing is going to look like, is those food type commodities like corn. You use corn to make sugar, so at the very least, whoever is buying corn syrup to make a juice drink is paying $3.75 a bushel for that corn. So that's what we want to watch, because when that's $9 a bushel or when it's $2 a bushel and the price of corn syrup gets affected in a dramatic way, it can be dramatic enough to affect the price of grape juice, even though we only compete with those beverages indirectly. But yes.
I think we're lucky to have you. I truly do, because I don't want to have to learn any of that. So I'm glad you're here to study that and then relay it all to us. Thank you.
I think that's all we have for this week. I know we don't always talk about general macroeconomic issues, so if you do have questions about this, we can certainly deal with it in the coming weeks. So you feel free to comment down below or contact us via social media or call our offices, send us an email, whatever suits you best. Join us for the conference next week. We'd be happy to talk to you then at a safe distance of 3 to 6 feet.
Remember your card so you can get your recertification credits.
And until then, we will see you later.
Have a great week.